Canada, maple syrup and like Captain say, ay, kick your ass all hockey season, ay, now teach me riding horses, ay, yeah, this is Canada.
First and foremost, Canada wasn't involved, we weren't notified, and we do not have an intention to be involved in any military strikes or operation. We share the concern of the United States and many other countries relating to Iranian nuclear proliferation. And in fact, we've called on Iran for a number of years to cease proliferating in terms of its nuclear capacity. That's why we have not had diplomatic relations with Iran for 15 years. At the same time, we prefer a diplomatic solution. This is why I have spent the last 2 days speaking with my counterparts across the Middle East and in the Gulf states, from Jordan to Qatar, to the Kingdom of Saudi Arabia, to UAE, and all of my G7 counterparts, stressing that Canada believes in a diplomatic and peaceful solution, and as soon as possible, we would like parties to get to the table.
Hello, everybody. Today is Monday, March 9th. My name is Miloš Krajčnik. This is the Canadian Sovereigntist. It's nice to have a diplomatic solution. You know, she's not wrong. We should always strive for the diplomatic solution. The problem is when that diplomatic solution doesn't go anywhere. When the other party just doesn't care, right? That's the problem, right? And obviously, Canada is not really a party to the events that are going on, so our opinion doesn't really matter to a higher degree. Like our opinions doesn't matter because the U.S. and Israel are conducting everything. Do we want to take part of it? I don't think we need to go down that road. I think it's just an unnecessary risk to Canadians. I don't see it. But the story today has nothing to do with the war. It has more to do with the Canadian bureaucracy that just doesn't seem to let up, you know. And we have another story kind of tying into what I talked about on Friday, but it's that Canada's largest oil sands company just paused an $8.25 billion expansion, guys. And it's not because the oil ran out, and it's not because the company's struggling. It's because like they made $10.8 billion last year, just so you guys know. And they paused because Ottawa can't finalize its own carbon pricing policy before its own deadline. And that deadline is April 1st, guys. And this is what regulatory paralysis, guys, looks like when it has a price tag. Let's go through the article. I think you guys are going to enjoy it. Canadian Natural Resources Limited, CNRL, has hit pause on the planned $8.25 billion expansion of its Jack Pine oil sands mine in northern Alberta, citing uncertainty over the government policies and calling for the end of carbon pricing. The Jack Pine project, which would have included the construction of a new extraction and treatment processing plant, was slated to increase the Calgary-based company's bitumen production by 150,000 barrels a day. CNRL President Scott Stouth told an investor call Thursday morning that it was being deferred due to lack of finalization of government regulatory policies around the carbon pricing and methane, which creates uncertainty and economic burden for our long-term growth. Mr. Stouth said the company will wait until the federal and Alberta governments iron out new rules to figure out if the project remains economically viable. Guys, and I really want to stop here because it just really goes to show how ridiculous this is, what's going on. Because let's be clear about what his CNRL, guys, is produced 1.57 million barrels a day in 2025, guys. That's 15% more than the year before that. Net earnings of $10.8 billion, guys. That is not a struggling company looking for bailout. This is Canada's largest oil sands operator at peak production with billions ready to invest, guys. Sitting on its hands because the federal and Alberta governments cannot finalize a carbon pricing tag agreement before their own deadline of April 1st, guys. That deadline is not new. Ottawa and Alberta signed an energy deal in November, guys, committing to resolve the carbon pricing issue by April 1st. And it's now March, guys. We're 3 weeks away. And the agreement exists. The deadline exists and the money is ready, guys. And CNRL is on an investor call telling shareholders it cannot build because the government has not decided what it believes yet. Guys, this is not an ideological argument about whether carbon pricing is right or wrong. It is an argument about whether Canada is a reliable place to invest at all, like in general. And right now, Canada's largest oil company is telling every investor watching that it is not. It's just simply not, guys. When a company with $10.8 billion in earnings will not commit just above $8 billion because it cannot get a straight answer from its own government, guys, that is not a carbon story. That is governance failure. And that is the general problem with what the Liberals have been running. It's a lot of promises. We're going to do this. We're going to do that. Canada's going to be this big economic sovereign nation. And then when push comes to shove, there's red tape here, there's red tape there. Oh, we can't do it now. Oh, methane's now the big problem. Carney had that statement. You know, it's not CO2 isn't the problem anymore. Now we have to capture methane. Methane is really the thing that's creating these greenhouse gases. Carbon pricing and emissions policies from part of a sweeping energy agreement signed by the two governments in November. The agreement laid the conditions for construction of a new pipeline to the West Coast to help diversify energy exports and committed Alberta to boosting its industrial carbon price, which the province froze last year at $95 a ton. The Memorandum of Understanding promised to raise the minimum credit value, which it calls the effective price, to $130 a ton. It did not set a deadline, but both sides committed to an agreement on carbon pricing by April 1st. CNRL is awaiting the outcome of those negotiations, Mr. Stoth told the Globe and Mail in an interview. He added that the industrial price on carbon should be scrapped altogether for oil sands companies that use emissions reduction technologies such as carbon capture and storage. Mr. Stoth pointed to the plan in the agreement for the construction of the Pathways Project, a massive CCS effort, carbon capture storage effort that the deal says will be built by 2040 to achieve emissions reductions at date-specific intervals. We should not be subject to carbon compliance costs when we are, in fact, sequestering those CO2 emissions. He said in order for the oil sands to be competitive, the carbon cost should not apply to projects that have CCS. And guys, this is really a key place to stop because the whole thing is just ridiculous. The whole thing is so ridiculous because of what I mentioned a second ago. The ESG, they've literally come out and said that man-made efforts to stop global warming are pointless because the global warming that's happening isn't man-made. So whatever this carbon policy stuff is, the only thing that's good for carbon policy itself is the quality of air we breathe, which is fine. We need to have a track on what the quality of air is that we breathe, but pushing it past that, you're creating an environment in which you'll never be competitive on the global stage to do anything. Right now, we're not even competitive for our own companies to invest in ourselves. Imagine that, guys. This is the most ridiculous thing. And so now we have CNRL, who's not just complaining about uncertainty. They are making a very specific and reasonable argument. If a company is capturing and storing its own carbon emissions through carbon capture and storage technology, charging them a carbon price on top of that investment is just a double penalty. You're just double penalizing these people. Like, it doesn't make sense. And you're paying to eliminate the emissions and then paying again as if you didn't do anything. Guys, this is not environmental policy. This is a tax on companies that are doing the right thing. They're already doing what needs to be done. But if you zoom out from the CNRL specifically, because this is not just a one company problem, guys. This is a pattern across Canada. Canada has the resources. Canada has the companies ready to build, and Canada's own policy environment becomes the problem, guys. We talked about Nutrien probably a month or two ago. And Nutrien is the world's largest, guys, potash producer. It mines exclusively in Saskatchewan. And last November, it chose to build its next major export terminal in Longview, Washington. instead of British Columbia. Not because of red tape primarily, but because when they ran 30 criteria, including rail costs, construction costs, and infrastructure reliability, the US won, guys. Canada lost a competition to host its own resources because we never built the rail capacity. We never solved the port bottleneck on Vancouver's North Shore and never gave companies the regulatory certainty to plan around it. So Ottawa's response was to call Nutrien and ask them to reconsider, not to actually fix the infrastructure. We haven't heard one story about Ottawa saying, guys, we really messed up. Our rail sucks. Let's fix this situation so that we can actually export within our own borders. Instead, they called them up to ask the company to make the more expensive choice, guys, out of patriotism. Out of patriotism. Ship slower, ship less because you're Canadian. Come on, man. CNRL is the same story. It's the same story with the carbon pricing label on it. Canada keeps creating conditions that make it rational for Canadian companies to pause, downsize, or reroute to another country. That's embarrassing. Let's keep it going, guys. Mr. Stout said the outcome of the federal-provincial discussions would govern whether it makes sense for oil sands companies to build the Pathways project as well as the sector's overall economic viability. We're hopeful that the governments will come together with a fiscal package that promotes that growth opportunity from a competitive basis so that our oil sands can compete with any jurisdiction anywhere in the world, he said. It has been a record-setting year for production of CNRL and many of its oil sands peers, including Suncor Energy and Cenovus Energy. CNRL produced 1.57 million barrels a day in 2025, roughly 50% more than in 2024. Its net earnings were approximately $10.8 billion. So that our oil sands can compete with any jurisdiction anywhere in the world. That is a key sentence there. And that is what CNRL's president said. And it's not asking for a handout, guys. It's not asking Canada to pick winners. It's asking Ottawa to create conditions where Canadian energy can compete on a level playing field globally. Guys, that is an extraordinarily modest ask from a company sitting on $10.8 billion in earnings. And the fact that it has to be made publicly on an investor call because two levels of government can't finalize an agreement they committed to in November tells you everything about the relationship between Ottawa and Canada's resource sector, guys. The Pathways project is also on the line here. This is a massive carbon capture and storage effort that the industry and Ottawa agreed to build by 2040 to reduce oil sands emissions at scale, guys. The entire decarbonization roadmap for Canada's most valuable export sector is sitting on the same April 1st deadline that CNRL is waiting on. Guys, this is not one company pausing one project. This is the federal government's own energy and climate strategy stalled because it cannot finalize terms with a single province on a deal it already signed. Canada keeps announcing that it is open for business. This is the headline story behind every one of Carney's meetings, every one of Carney's visits across the globe. We're open to business, middle powers. We're a resource superpower. But when CNRL just told every investor in the world what that actually means in practice, and while this really matters to Canadians, is that the April 1st is 3 weeks away, guys. If Ottawa and Alberta miss that deadline, the signal to energy investors is not subtle. Canada's largest oil company will not commit $8.25 billion. The industry's shared carbon capture project loses its timeline, and the next Nutrien, the next company evaluating whether to build in Canada or the US or somewhere else, it becomes a lot easier. They get an answer basically immediately. Why would we want to invest in Canada if it's going to be this complicating? Canadians keep hearing that Canada is this big resource superpower with sovereign control over its own economic future. CNRL's pause is what the sovereignty actually looks like right now. We have the money, we want to invest it, but the government's not letting us. Guys, that is not a carbon story. That is a country that cannot get out of its own way. That's all I have for you guys today. Let me know what you guys think in the comment section below. Like, share, and subscribe. My name is Miloš Krajčnik. Stay informed, stay curious, and God bless Canada.